Gold is everywhere in jewelry, in walls, even in your electronics. But the real question is how is it divided and who holds the biggest share? When you break down all 216 to 65 tons of above ground gold, the results might surprise you. Let's uncover who really owns the world's most trusted asset. Gold still plays a massive role in culture, industry, and geopolitics. From wedding necklaces to central bank vaults, it's both a cultural hedge and a strategic asset. Let's split the 216 to 65 tons into four real buckets, which is jewelry, investment, central banks, and industrial uses. Jewelry accounts for 97,149 tons or 45% of above ground gold. And here's the mind blowing fact: around 90% of this jewelry gold is owned in Asia, held by private households across countries like India, China, Pakistan, and the Gulf. That means Asia alone holds nearly 87,000 tons of the world's jewelry gold. Bars and coins account for 48,634 tons of gold, making up about 22% of above ground gold supply. This segment is largely held by retail investors, private wealth holders, and institutional funds, with a significant portion stored outside the formal banking system. And within this investment pool, around 3,000 tons are held by gold-backed ETFs, giving them roughly 6% of the entire investment segment. Central banks collectively hold 37,755 tons of gold, representing about 17% of entire ground gold stock. This is the backbone of national financial security. Countries use these reserves for financial stability, crisis protection, and long-term monetary strength. And this segment has been growing fast. From 2022 to 24, central banks added more than 3220 tons, including 1089.4 tons in 2024 alone, an increase equal to about 8.5% of all global central bank reserves, marking the strongest three-year accumulation in modern history. The report of 10 central bank holders began with the US at 8133.5 tons, then Germany 3352.7 tons, Italy, France, Russia, China, and so on, each number reflecting history and current strategy. Industrial applications consume 32,727 tons of gold, around 15% of the global above ground stock. This is the functional gold essential for technology, medical devices, dentistry, telecom infrastructure, and precision components. Its unmatched conductivity and durability mean it's used in everything from smartphones to satellites. And because industrial gold often ends up in the products that are not collected or recycled efficiently, a significant share becomes effectively lost to the consumer market, reinforcing gold long-term scarcity. Jewelry and investment holdings together make up roughly 67% of all above ground gold. A simple way to feel this: divide the whole above ground stock among 8 billion world's population. That's about 27 grams per person, roughly 1 or 2 small rings for each human on Earth. Below the surface, the world still holds significant gold reserves, an estimated 132,118 tons. This underground stock is divided into two parts. About 54,778 tons are classified as proven reserves, meaning these deposits are economically practical to mine at today's prices. The remaining 77,340 tons fall under hypothetical resources, gold that we know exists but which may require higher prices, advanced technology, or more exploration before it can be mined profitably. At a baseline price of $2,412 per ounce, the world's total gold stock, above ground plus below ground, is worth an estimated $53.5 trillion, which is approximately 47.01% of the entire $113.8 trillion global economy. The higher gold prices, the more valuable and influential its major holders become. And when gold reached $200 per ounce in late 2025, the value of global gold increased even further. In 2024 alone, gold delivered a 27% rise, showing how strongly it reacts during periods of geopolitical tensions and economic uncertainty. When you look at gold through this lens, how fast its value moves, how much it's worth, and how closely it depends to global risk, it becomes clear that why nations, investors, and households fight to hold it. In a world where gold values can shift trillions, gold is not just a wealth, it's leverage, stability, and power. Gold supply is extremely limited. In 2024, mines produced 3661.2 tons, while another 1370 tons came from recycled gold, giving a total supply of just 4974.5 tons per the entire year. Compared to the global demand, that's a very small amount of new gold entering the market. This tight supply combined with the growing demand is exactly why gold is seen as a strategic and reliable store of value. Additionally, confirmed profitable resources are only 54,778 tons. At the current mine output rate, those reserves would be utilized in roughly 15 years, an alarming fact that highlights structural scarcity. So why it holds such enduring power? Jewelry creates a massive decentralized base of demand, culturally and financially, while bars and coins represent private investment. Central banks hold gold as a strategic reserve and have been quietly, steadily increasing their positions. Industry uses are meaningful but relatively small. Together, these dynamics make gold a unique asset, scarce, culturally embedded, and geopolitical significant. If you learned something new, hit like, subscribe, and comment your thoughts below. See you in the next video.